College has gotten quite expensive, and I'm sure if you're a parent, that is no surprise to you. So today I want to talk through the benefits and some misunderstandings of a 529 account and how it can help your child fund their education. So there's a lot of new things that have come into play with a 529, but I know that a lot of you are here just simply understanding or looking to understand the benefits of opening one of these accounts. So I'm going to keep this under 10 minutes, and I want to share everything that you need to know before or if you have one of these open in terms of what you should be looking for. So the first thing that I assume you already know is that these accounts are for education, right? So one of the main benefits of a 529 is that not only can you take a deduction or a credit when you make a contribution to this account, so long as you live in a state that has state income tax and allows for this credit or deduction. We're here in Texas, so we don't have that deduction. But this is a possibility depending on your location. But then when the money is in the account, it's going to be able to grow tax deferred. And as so long as the funds are used for room and board, tuition, books, things that the child needs for school, all of the earnings and the rest of that withdrawal is also going to be tax-free. If you compare this to, say, a brokerage account, any non-retirement account, you know that if you invested money, it grows for 10 years, you're going to be taxed on the earnings portion when you go to withdraw that money. With a 529, it's completely different. The money grows tax-free and it comes out tax-free so long as it's used for those qualified expenses. Here's a couple of common misconceptions that I see when I look into 529 plans or when we get questions from clients. The first is simply going to be, I'm worried that my kid is not actually going to use this account, or I'm worried that I'm going to overfund it. Right, so there's a few important things to know about the portability or how you can transfer a 529 account. The first is to know that you can change the beneficiary on a 529 account. So let's say you have your oldest son, he goes to school, he only ends up using 70% of the account and there's still this remaining portion left over. Well, you can just change the beneficiary to your younger son and he can use the funds for college. The other thing is actually a new rule that came into play, I think in 2024, and that's being able to move a total of $35,000 from a 529 account to a Roth IRA for your son or daughter. So if you're familiar with a Roth IRA, you know that this is just a tax-free retirement account that would be very good for them to start early in their career. And essentially what you can do with this new rule is every single year you can do a max contribution from your 529 over to that Roth IRA. There's a couple of other rules here, and I hope that I don't forget any, but let me kind of list those off here. So the first is the 529 has to be open for 15 years. If it has not been open for 15 years, you can't do this strategy until that timeline is met. The second piece is that any contribution made in the last 5 years is not eligible for this, right? They really want to make this very tough to get to, but it's still important to understand that you can transfer this money out. The third thing is simply going to be your child has to have earned income, right? You can't just move all this money over to their Roth IRA if they're not making income from a job. The fourth thing to know here is that you can never contribute more than the max, right? So it's not a Roth conversion, it's a Roth contribution. If you are familiar with the difference between those two, a Roth conversion, you can contribute as much as you like at one time, whereas a Roth contribution, you can only contribute what the annual amount that the government allows you to contribute. So let me give you an example here, and I think maybe this will do a better job of illustrating what I'm trying to say. So let's say your son Johnny goes to school, and to make it easy, he still has $35,000 left over in that 529 account. Once he gets a job, he's allowed to make a contribution from his 529 over to his Roth IRA every single year until he hits that $35,000 mark, assuming that Johnny's 529 has been open for 15 years and all of the last contribution to that 529 was more than 5 years ago. So as long as he has that earned income coming in and he meets all the timeline rules, he's allowed to make the maximum contribution to the Roth IRA. So I know that's a lot of details there, and I hope it's not more than you asked for, but that's an important piece to understand, right? Is there are options if your son or daughter doesn't use all of the money or if they don't use any of it at all. Another common one I hear is my son or daughter got a scholarship, so we don't actually need to use the 529 funds. And it's important to know that whatever amount of scholarship they received, they're allowed to withdraw. You're allowed to withdraw from that 529 account, and you're not hit with the 10% penalty that you otherwise would have if it wasn't for a qualified school expense. You'll just have to pay income tax based off of the earnings in that 529 account, right? So regularly, if you took it out and you went and spent it on groceries or something, you'd have to pay a 10% penalty in addition to taxes. Here, you just have to pay taxes on the earnings, but on the bright side, your son or daughter got a scholarship, so that's pretty cool. One last misconception that I'll throw in here is that it only can be spent on college. And I'm weary of saying this because it's sort of akin to spending retirement dollars before retirement, but technically you're allowed to spend up to $10,000 per year from kindergarten to 12th grade from a 529 account and have the same benefits come into play. So know that that option is available to you, but also know that the longer you leave money in the 529 to stay invested in compound, the more helpful it's going to be for college, which ultimately is the main goal here, but you can technically spend it on K through 12 up to $10,000 per year. So lastly, we're going to talk about contributions that you can make into a 529. And there's certain limitations based off of what the government allows from a gifting standpoint in America. And that amount for 2025 is $19,000 per parent, right? So that's going to be $38,000 if you have a 529 account. You can contribute in the current year. If you're watching this in a future year, it's definitely going to be higher. An important thing to know though is if you're late on filling up your child's 529 account, you can do what's known as a super fund. This allows you to contribute 5 years worth of contributions in a single year. So for this year specifically, since $19,000 is the gift limit, we just multiply that by 5. $95,000 is what you're allowed to contribute to your son or daughter's account. And then if we double that, of course, we have $190,000 that we can contribute in 1 year to the 529, right? So I know that's a large figure, but just know that option's out there for you if you are late on contributing to a 529. Okay, so that's it for today, folks. I hope this video was informative. If you have any questions, please feel free to reach out to me or message me. But as always, the earlier you get started with some of these accounts, the better. So if the best time to start was 20 years ago, second best time is today. So always keep that in mind with your investments or with your child's education fund. Fair disclosure for these videos, of course, to always have a conversation with your financial advisor or a trusted tax professional. They'll help you plan and help be specific to your situation. So if you have any questions, like I said, please feel free to reach out to me. But that is it for today. I appreciate your guys' viewership and we'll see you next time.